I am not here to say scrap your dividend investing strategy or throw all your dividend stocks down the drain, but listen up and pay close attention. Regardless of what side of the political aisle you stand on, the 47th president of the United States is officially Donald Trump. And not only that, but the Republicans captured the Senate and kept hold of the House as well, which now we literally just experienced that full Republican sweep, meaning that certain sectors can and very likely will be impacted. So if you're an investor, which I'd assume you all are, this should really mean something to you, especially if you're running your life as you should be, like your own CEO. Now, again, this is not to say to do anything crazy, change your investing strategy, sell off all your holdings in your portfolio, or really do anything all too dramatic. But it does mean that your eyes should begin to scan through different sectors if you're looking for new dividend stock ideas or just general stock ideas, because not all sectors are even created equally under various policies. Now, one thing that's very clear is that bond investors probably aren't too happy under 47. A matter of fact, yields have already soared on fears that all this extra spending that may occur under Trump will widen the fiscal deficit quite dramatically. Now that leads to an inflation outbreak. Keep that in mind. In contrast, Bitcoin flew to higher highs, briefly peaking over $75,000 to hit an all-time high for an intraday gain there. And get this, just as Trump was announced president-elect, the Dow shot up over 1,000 points for the first time since November of 2022. But what may now seem like just total mayhem, a lot of volatility, stress, uncertainty, it's all typical before, on, or after election days, as we might get some big changes. Now this is then your time to realize that if you tuned in 2 weeks ago or last week, I ran some ideas by all of you, and if you ran with even some of them, you would have benefited greatly. So this is the plug to say, join me here on this journey, subscribe to the channel for more stock ideas, economic insights, and masters of the market chats. However, I now want to talk about some sectors and even some stocks that you should look into to enjoy some more security in terms of Trumponomics and policies. With that, let's kick off with some defense sector opportunities, to which, as you probably know, just by nature, Republicans have traditionally been good for defense stocks. And Trump is seen as being extremely hawkish on protecting American interests, which is well defined and clearly stated when he says peace through strength. This may be an area that will also be heavily influenced by the makeup now of Congress, but a clean sweep there by the Republicans in the House as well. So just expectations are flying higher for this sector. With some of the winning stocks to consider, Raytheon, Northrop Grumman, or a personal favorite of mine, Lockheed Martin, which I want to talk just a little bit more in depth about right now. You see, Lockheed is the most dominant defense contractor in terms of market capitalization, sheer size, and profitability, as one of the strongest out there in the game in terms of the relationship with good old Uncle Sam, with millions of dollars worth of contracts being secured weekly and monthly, so on and so forth. Now, pulling up their stock chart, we're going to go ahead and see a nice pop when the news broke about Trump's victory, but click out here to the year-to-date view, where we're going to see the stock has already soared by over 20%. And no, this was not even Trump related, but just based on where we are right now, geopolitically speaking. Now, on the 5-year, over 40% worth of appreciation. Scrolling down, we're going to uncover their revenue flows to back up my claims here that it's a healthy company. But more importantly, we're going to go ahead and look into that balance sheet, where we're going to see assets that outweigh liabilities year in and year out. Incredibly important. Assets topping $52 billion in 2023, whereas liabilities coming in at only $45 billion. However, being in Lockheed Martin personally for the dividends, we can pop open Simply Safe Dividends to see that we're going to get a safety score coming in at 84, a dividend yield coming in at 2.41%, and scrolling down, we're going to get a payout ratio at 45% while it remains a player in the game with a 31-year dividend streak. But check this out, a powerful 16% growth rate with it as well. Now, if defensive picks just aren't your shtick, or perhaps you already have your bases covered with defensive picks in your portfolio already, we can go ahead and tap into the energy sector, which is interesting because we really do get a split within the energy sector, as energy as we know it from oil, fuel, and coal versus renewables. Personally, I think renewables are going to take a hit this 2025. However, when it comes to more of the traditional opportunities that are out there within the energy sector, well, Trump says it best when he says, drill, baby, drill. And that sentiment is now ringing louder and louder, which is why it comes to mind. Now, the largest names should continue to perform quite well just based off of demand metrics, and we're going to continue to see that being the case on the consumer front, definitely from the big business front, and even militarily. But the names that come to mind right off the bat would come down to our winners time and time again, from ExxonMobil, ConocoPhillips, Peabody Energy, and Nucor. I will highlight my most bullish pick here for you, that being ExxonMobil. It's a leader within the industry, making it a no-brainer that is progressively looking into greener energy sources as well, while still ensuring to capitalize on the present-day necessity for oil and gas. But pop open the stock chart with me, where we're going to find a stock that has also jumped after election news. However, year to date, it's up by over 18%. As I mentioned, it's going to continue, or likely to continue, to perform as it has been, just based off of sheer demand. Click out now to the 5-year view, where we're going to see the real magic of investing into ExxonMobil. We get 70% worth of share price appreciation. And scroll down with me to see a healthy inflow of revenue year in and year out, while we also get plenty of reliability found there within the balance sheet as assets far outweigh liabilities. We're coming in at 400 billion plus in terms of assets and just 163 in liabilities. Now, if you really want a liquid gold dividend gem pipeline, here you have it with ExxonMobil, coming in at a solid safety score, a higher dividend yield at 3.25%. But scroll down with me, we're going to get a bit higher of a payout ratio, which I don't necessarily love. It is higher than the competitors out there, but nonetheless, over 142 years worth of a dividend streak, while continuously pumping up that dividend by an average growth rate of 7%. Now, investors, before I actually cover the one sector I'm insanely bullish on under Trump, or even if it was Kamala or anybody else, I do want to ask you for a favor. If you're getting value from this video, it would be of huge help if you can tap on that thumbs up button for me, just so I know that you're enjoying videos like this with stock ideas, and I'll make more of them just for you. But with that, let's go ahead and talk tech. Now, if there's one thing for sure we all know about Trump, it's that he loves business, like bigly, as he would say. So with tech being our future, and Trump likely to kick aside Biden's policies and all these antitrust cases, we're surely going to see a surge across all Mag 7 players, all of them. And my personal favorite, or actual pick of the bunch, comes down to Alphabet. Now, here's the deal when it comes to Alphabet, or Google for that matter. It's the go-to for all businesses when it comes to their advertising dollars. And better yet, when interest rates are coming down and these companies really get back to advertising, Google and YouTube are going to be there. Yes, YouTube is owned by Google. Chart-wise, we're going to see that Alphabet popped to $176 per share when the news came about that Trump was elected, and already plenty of analysts actually coming back around with buy ratings. But click now to the year-to-date chart. We'll see over 26% worth of share price appreciation, and on the 5-year, over 167% worth of appreciation. And if we scroll down, of course, we're going to get heck of revenue flows year in and year out with Alphabet, but more importantly, we get the balance sheet, which is insanely healthy. It's one of the cleanest balance sheets I've ever seen, with 402 billion in assets, with just 119 billion in liabilities as of 2023. Now, is Alphabet or any of these other Mag 7 picks really going to be the go-to dividend whales for you? No, but total return is really what matters. And as a total return guy, Google's going to deliver with total return, but sprinkle in the dividends. Simply Safe has it rated as an 80 in terms of a safety score, a 0.46% dividend yield, with plenty of an ability to continue to deliver through on a dividend streak at just a 5% payout ratio. Now, if nothing speaks out to you, or you think that we're going to find ourselves in some crazy market meltdown, just keep calm, dollar cost average into the S&P until the end of your days as an investor, and you will be just fine. But now, investors, if you really want to catch some of the stocks that I am most bullish on, whether it was Trump, Kamala, or any other Joe, well, some real winners out there that, again, I cannot stop talking about. You can find them here. I do want you to comment down below with your thoughts on the stocks that I did mention. And if you have other stocks in mind, definitely let the entire community know by commenting down below. Subscribe, and from there, I will see you in the next one.